straight on to the business news for you on the programme. We're seeing currencies around the world really falling in value against the dollar. We've spoken at length, of course, about the British pound, but the Chinese yuan has also now fallen drastically as well. And our business editor, Charles Pellegrin, is here to tell us all about it. Charles. That's
right, Stuart. The last time we saw the Chinese currency at that particular level, as we're seeing today, was in 2008. And this is piling the pressure on the People's Bank of China to intervene directly and prop up its currency. So let's take a look at the exchange rate for the offshore yuan, which is in theory not subject to limitations on fluctuation that can be seen on the onshore yuan. $1 currently worth around 7.23 yuan, about 0.85% lower in value than a day ago. Don't be fooled by that positive sign. Over the year, the onshore yuan actually losing 13.6%. In value. This is partly the result of differing monetary policies in the U.S. and China. While the U.S. is raising rates in order to combat inflation, therefore shoring up the value of the dollar, China is trying to stimulate growth, leaving rates lower. One party official saying the yuan's depreciation is tied to a certain extent to China's economic difficulties right now, and promising the yuan will return to a, quote, reasonable range as soon as next year and after new policy directions are given at the 20th Party Congress in October. Let's see how this has affected trading in Asia this Wednesday. Stocks trading lower on the main Asian indices. You can see the Shanghai Composite down by over 1.5%. The Hang Seng in Hong Kong down 3.25%. The property stocks really showing big losses in Hong Kong. The Indian rupee also marking a record low. And that sell-off in Asia bleeding into the main European indices at the open as well. As you can see, the FTSE in London down by 0.75%. Around the same for both the Paris CAC 40 and the DAX in Frankfurt. And as the negative feedback on the UK's new fiscal plan keeps trickling in, this time from the IMF, the International Monetary Fund, releasing an outspoken statement criticizing the government over its plans to cut taxes and warning that this will fuel the cost of living crisis and increase inequality. This sent the pound plunging again, once again against the dollar. Also of interest in the comments on the fact that the UK government and the Bank of England appear to have conflicting goals, with the central bank aiming to keep inflation in check by raising rates, while the government's plan requires more borrowing. Here's the IMF's statement. Given elevated inflation pressures in many countries, including the UK, we do not recommend large and untargeted fiscal packages at this juncture, as it is important that fiscal policy does not work at cross purposes to monetary policy. Now, moving on to the next story here. In Germany, more and more companies are slowing or even stopping production to stay in business. Skyrocketing gas and oil prices since the invasion of Ukraine have created huge problems. 1 in 10 small and medium-sized companies have had to cut back their work, and many are waiting for government help to not go bankrupt. Our correspondents in Germany have this report.
The decision wasn't easy, but it was inevitable. On September the 1st, this family company entirely stopped production of roof tiles. The once cheap natural gas they need is now unaffordable.
It's really sad. It's getting colder and colder here. This is the first time we've had to turn off the kiln.
Stopping work to stay afloat. The gas bill at the tile factory has gone from 18,000 to 300,000 euros a day. 100 employees have been put on short-term work, and the others take care of maintenance. As they hope for a cap price on energy, the fear of going bankrupt weighs on everyone.
We can't keep this up for years. We can last for a month or two, but then something has to happen. Otherwise, the lights will go out forever in our company.
As winter approaches, the energy crisis spreads fear through all German industry, from tile making to baking. Here in Beilitz, just outside of Berlin, they've cut back on the products on offer, as well as opening hours. The hike in price for both ingredients and energy has led some 500 bakeries to close.
Hallo, guten Morgen. Hallo.
Once again, the wait feels endless as promised government money still hasn't taken shape.
They talk to us about a cap on energy prices for industry, for example, or about subsidies for companies that use a lot of energy and a drop in VAT. All these measures are being talked about, but for now, nothing concrete has happened, and it's very hard for us to manage.
The number of bankruptcies jumped some 26% last August compared to the year before. With economists predicting a recession in winter, the German economy has some tough times ahead.
And let's finish here with some encouraging news for people suffering from Alzheimer's. Pharmaceutical companies Eisai and Biogen say their experimental drug called lecanemab, I'm not sure the pronunciation, reduces functional and cognitive decline by 27%. This, the result of a study on 1,800 Alzheimer's patients conducted over 18 months. There were some side effects, though, with higher rates of brain swelling and small bleeds, but the manufacturers saying those are, quote, rarely symptomatic. The data has been published in a press release, but hasn't been peer-reviewed yet, though more details will be released in November and then published in a peer-reviewed journal then. The successful study would bolster the chances of seeing this particular drug approved by the U.S. Federal and Drug Administration steward.
Good to have some positive news. Hopefully some hope on the way for people with Alzheimer's.